Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code. This is the Forex Super Model daily review for Friday, the 12th of November 2021. Time is 0400 GMT, 4 o'clock in the morning. Asian session coming to a close, European session firing up, our lunchtime, North American session. Right, tomorrow, yesterday then, get it right, we had a positive opposed driver in the dollar, plus 80. Front and back door flows, mainly coming out the pound at minus 61, out the euro at minus 35. And the yen was the positive rocket, plus 16, activity plus or minus 96. Intra-week then, this is the most relevant because it's from Monday the 8th open to about 15 minutes ago. We've got a positive unopposed driver in the dollar, plus 335. No backdoor flows. The opposing negative flows mainly coming out the euro at minus 175, out the pound at minus 140, and the yen is the negative rocket, minus 20. Activity plus or minus 335. So over the week then we've had a strong dollar driving to the exclusion of all else in the majors. Excuse me. And yesterday we had the dollar still strong, but it's the opposed positive driver, so its strength is waning. And if you look at the intraday then, which is the Asian session to about 15 minutes ago, we've got the dollar as the positive unopposed driver, plus 51, which with no backdoor flows. The opposing negative flows mainly coming out the yen at minus 30, out the euro at minus 13, and the pound is the negative rocket, minus 8. Activity plus or minus 51. Basically this is likely to be a peak in the dollar, but we'll talk about that in a minute. So what we'll do is stop that there and write up the flows. Right, we've written up the flows then. So the euro is strong except against the dollar and the pound. The yen is strong except against the dollar, the euro and the pound. The pound is strong except against the dollar. The Swiss is weak except against the AUD and the NZD. The CAD is weak except against the Swiss, the AUD and the NZD. The AUD is weak except against the NZD. The NZD is weak across the board, and the dollar is strong across the board. So we've got NZD weakness across the board, dollar strength across the board, and you've got secondary pound strength there, and you've got secondary AUD weakness there. So you've got this this dollar strength, which we saw in the Asian session. It's the unopposed positive driver, and it looks like this is the final throes of dollar strength, and you're going to get a well, we'll talk about that in a minute as well, but it looks like we're starting to see the final strength in the dollar and the final strength in the yen, sorry. Right, what's been knocking it about, or has, or will, we've had, previously we had soft AUD employment data yesterday, and we've had neutral to soft GDP data for the GBP, and today we've got a pretty light calendar, but it's US Michigan consumer sentiment, and rolling over to next week you've got Tuesday and Wednesday you've got some GBP data, so that's something to bear in mind. Right, so the Americans are back after their holiday, and we'll take it from there. So we'll write up the asset classes and then do the final analysis. Right, we've written up the asset classes then. So US dollar index, basically it's done a break. It's broken the resistance. It's plus 0.26 above the resistance, so it's broken 26% in model terms above the resistance. Gold in theory won't like a strong dollar, but it's ignoring it to a certain degree, and it's 0.24 from the high, due to the inflationary effect on gold. So oil has done a break and it's come back, and it's 0.25 from the high, so it's 25% off the model high. Wall Street, S&P Tech, they've all got this similar look. They've done resistance breaks and they've come back, and they're 0.14 from the high Wall Street, 0.12 from the high S&P, and the Tech is 0.14 from the high. So they're in lockstep pretty much. They've done a break on resistance, as we said, and they've come back about between 12 and 14%. Right, US 10-year in the bund. This is the price. So we had this pump down in price, rising yields. Now we've got this bounce in price. And the US 10-year is 0.18 from the floor, so it's pretty near the floor, so strong yields there. And the bund, on the other hand, is 0.40 from the high, so it's above half marks in price, so the yields are relatively low. So we've still got this differential in yields between the US and the Europe. So and we've got copper to have a look at. It's been chopping about. It's 0.45 from the floor. It's below half marks, so it's still a little bit soft. And US steel, on the other hand, is above half marks. It's 0.40 from the high, 40% below the modelled high. Right, so just get rid of that and do the final analysis then. So as I say, the Americans were on a market holiday yesterday, and we're starting to see a line up in the flows, which we'll talk about now. So right, so the dollar, the euro, the yen and the pound, the CAD, the AUD, the NZD and the Swiss. Now if you look at the dollar, yesterday the dollar was the positive opposed driver. So the dollar was in plus fourth gear. Over the week, the dollar is in overdrive, plus fifth gear. And Asian session, it's yet again, it's the positive unopposed driver. So it's in fifth gear here as well. But yesterday it's starting to show signs that it's rolling over. Now this is likely to be a peak in the dollar, so we're likely to see this sort of effect. Now if you've got you've had a bit of an equity sell-off, nothing too drastic, but a bit of one. And the yen has been pumped up previously, and it's sort of quite high. We're likely to see a fall in the yen, and equities are likely to come up. The commodity currencies have been beaten down, and they're likely to hockey stick on the way up as well. So what we're likely to see then is sort of in the major, you're likely to see dollar and yen weakness, and euro and pound strength. Not necessarily in that order in terms of driving, and then you're likely to see AUD and NZD a bounce in that, so you'll see positive in that. CAD probably will be dragged along by the oil transmission, so you're likely to see neutral to positive on the CAD, and you're likely to see the Swiss go soft along with the yen. So that's what we think is going to happen. So we think that pretty much the dollar's peaked out. It may not. It may have a little bit of resistance to that, but we've got the Michigan consumer sentiment later, which is a tier 1 event. But basically, it looks like the market has cleared off a bit of froth off the equity market, and is now going to start having another go. And you normally would get yen weakness, dollar weakness in a full risk on situation, and commodity currency strength. So that's what we're looking for, and it's just a case of hanging your hat on what's likely to charge up the most. It just depends on the positioning, and we're away from the screens at the moment, so we can't really say exactly. But basically, that's what you need to be looking out for: dollar weakness, yen weakness, euro pound strength, and a hockey stick up on the CAD, the AUD, and the NZD, and a soft Swiss. So I hope that was useful. See you tomorrow for the weekly review, data cycle, etc. If not, see you Monday for the daily briefing. Thanks for watching. Goodbye.